Thank you, thank you. Appreciate it. And since you guys have nowhere else to go, most likely, thank you guys for coming on and joining us today while we're in this quarantine situation with the coronavirus. But yeah, so I want to jump right into it with you guys and talk about something that most likely you haven't heard of before, and really just boils it down to a simple question of how to make trading a simple yes or no question, and we'll get into that now. So before we get started, quick risk disclaimer as always. No representations are being made that the use of this strategy or any system that I'm going to show you can generate profits. Past performance not necessarily indicative of future results. You guys know that. Don't trade with money you can't afford to lose. Don't trade your rent money. Don't trade your grocery money. You guys know all that. And then CFTC rule 4.41, hypothetical or simulated performance results have certain limitations. If you guys are getting into the markets or you're testing new strategies, you should be doing so on a sim or demo account. But again, remember, those do have certain limitations. And then last but not least, no representation is being made that any account will or is likely to achieve profit or losses similar to those that I'm going to show you guys. Now, the first rule in trading is you need to know the name of the strategy or the setup that it is you're looking to take, right? If you're going to go out on a date with someone, you're going to go meet somebody, it's like, oh, what's their name? That's the first thing you identify their face, you put the name to the face, and you go, okay, cool, now I know who you are. If you don't have your strategies named, then that's what you want to do first thing. So for me, I have 5 strategies that I'm going to be talking through, and I'm going to show you guys one of them specifically, but those are going to be the targeting strategy, divergence, level to level, containment, and breakaway. I probably should change the name containment because that's kind of a not a good term to be using right now. I'll change it to quarantine. How about that? But yeah, so today's agenda for right now is going to be 1 through 8 here. Number 1 is why you are here. Number 2 is what are binary options. You may have heard that term binary options before, either in a good light or a bad light, and I'm going to put some potential risk or things that you've heard to bed there, and talk about actually the good things of that. Number 3 is how binary options work. Number 4 is why NADEX. If you have not heard of NADEX before, we're going to get into that and why it is that we're using them. Number 5 is what are the costs associated, right? Trading is a business and you need to know what your costs are. Number 6 is why traders fail. This one is really, really important. If you guys haven't, kind of come over that hump yet to profitable trading, most likely one of the reasons inside of this number 6 section is going to answer that for you. Number 7 here is my favorite trade setup, which is the divergence trade. And then number 8 is what to do next after this webinar, after we've gone through and talked through these things. Now, who I am, that's a picture of myself and my wife and my son, Jackson. I am a full-time day trader since July of 2011. I quit my job as an electrician I'm right outside Washington, D.C. I was doing work at Baltimore Johns Hopkins Hospital when I quit my job and went full-time as a day trader, and I have not had a boss or outside of Jeanette telling me what to do, anyone really telling me what to do since then. I founded MLT in 2014. A bunch of people saw what it was that I was doing, either through social media or just traveling, friends of the family, whatever. They're like, hey, can you show us what it is you're doing? And I'm like, I can try, and founded MLT in 2014. And since then, I've mentored thousands of traders from all over the world. We've got a ton of different countries now that follow us, a really large social media network between myself and my business partner, who also trains other students with me as well. We have over 500,000 people that follow us on Instagram. I'm also a travel addict. I love going to new places, experiencing new things. This quarantine right now, or the limited travel that we can do, is extremely rough for me personally, but we'll get through it as all things, they do pass. And number 5, I am a husband, a father, and a speaker there. And you guys can see my picture there on the right. All right, so why you're here. I like to put things in buckets, right? And there's really only 3 buckets that you can fall into when it comes down to the markets. So I want you guys to go ahead and let me know just by typing in 1, 2, or 3, which one of these buckets that you guys fall into today, so that I can kind of tailor some of the information. Either if a lot of you guys are beginners, I'll kind of focus in a little bit more on that, how you get to step 2. If you're in bucket number 2, I'll focus on how we get to bucket number 3. But bucket number 1 is you're the beginner. Maybe you've traded a little bit. Maybe you're just getting into the markets. You haven't really, you got a demo account set up. You haven't really put real money to test yet, or a little bit of real money. Number 2 is you've put some real money to the test. You've either made a little bit of money, lost a little bit of money, and it's just been kind of like a range bound. Your account's pretty much just gone sideways for the most part. And then bucket number 3 is where you're actually able to consistently make money from the markets on a regular basis. All right, so I see some 3s, some 2s, some 1s, 3 with war wounds. That's the top answer right there. I like that. Number 2, number 3, 0. All right, 1, 2s. All right, cool. So a lot of 2s in here. That's perfect. So that section of why traders fail, like I mentioned before, some of those things that are holding you back from getting from bucket number 2 to bucket number 3, we're going to address those in that why traders fail section. And that picture on the right there, bucket number 3, again, all these pictures are me, but that's actually my current desk setup right there that I'm actually talking to you guys from right now. All right, so let's talk about binary options. What are binary options? Now, who of you have heard of binary options before, either through a friend? Someone says, hey, you can do these things and you can turn $100 into whatever, or how many of you have heard that they're scams? What's been the relationship that you guys have heard and things that you've come across here when it comes to binary options? No, you haven't heard of them. Yes, you've heard of them. No. Okay. It was a casino scams. All right, cool. All right, so we got a couple scams. Cool. We're going to address those. And mostly negative. All right, cool. I like that. I like that you guys are more so on the negative side and that you've heard only bad things. And I'm going to show you why. Now, in my opinion, binary options are the best product for you to trade. Number 1, it breaks down options to a simplistic form. And the way it does that is it breaks it down to just a yes or no question. Like, will the markets be above or below this level by the end of the day? Now, starting capital of only $250. For those of you that are in bucket number 1 trying to get to bucket number 2, this is a perfect place for you to start. There's a really low capital requirement to get in, so you're able to put your skills to the test for just a little bit of money, right? There is something to be said for trading on demo and sim. Like I said earlier, you should be doing that, but you also don't want to then go just swinging into futures and you're controlling, $150,000 notional value. You want to start off small here with only $250 in capital. Now, there is no PDT rule. So for those of you that don't know what the PDT rule is, that is if you want to day trade stocks or options, you need a $25,000 minimum trading account in order to, say, trade something like Apple, Amazon, Google, and Facebook all in the same day or even in the same week. There's also timed exits. So you're able to work around your own schedule and fit this in to your already busy life. Now, there's also multiple markets available to trade. So if you're looking to trade Forex, you're looking to trade the indices, you're looking to trade gold, crude, there's always something in there moving and setting up, again, that works around your time. And it's virtually a 24-hour market, which means if you have a 9-to-5 job, then you're able to work around that and you're able to trade these either in the morning session or even in the evening because it's virtually a 24-hour market. Now, they're also CFTC regulated. So a couple of you guys in there talking about scams. This is CFTC regulated. That is the Commodity Futures Trading Commission. There are scams out there. There are scams out there, but there is a reason why we use NADEX, and I'll talk about that in a second. So what are binary options? NADEX binary options are limited risk contracts based on a simple yes or no market proposition like will the markets go up by the end of the trading day or will they go down? They also offer, like I said, ways to trade the most active stock indices, commodities, and Forex markets with relatively low collateral. They're also cash settled. And this is a big one that a lot of the scam sites out there, which again, don't use those. I've tested them out. If you make money, they don't send you your money back, right? It is possible, though, to close a contract prior to expiration, either to take your profits or cut losses. These other ones don't allow you to do that. So, for example, this screen here on the right, this little ticker symbol you can see here, that is US 500, which would be the S&P 500, 3116.50. So 3116.50 for a 10 a.m. expiration. If you think the market's going to close above that level, you can get long that. If you think the market is going to close below that, you can then get short that. How can one trade when they have a full-time job? I'll show you. All right. So why binary options are better? The traditional trader has to worry about all of these things and more. We got to worry about, if you're trading Apple, you got to worry about when the earnings are coming up. You got to worry about news events. You got to worry about delta, theta, gamma, puts, calls. Right now, the volatility, the VIX is just absolutely through the roof. I've been an options trader and a trader for many years now, as I said earlier, and the VIX is at extremely high levels to where I'm actually not even trading options the way that I normally do, because the market's just in such a limbo state of volatility that I'm actually reverting more towards NADEX as well, because that volatility hasn't changed in terms of the pricing for those. And I'll show you guys what I mean. All right, so price is king. Binary options are the best product for price action traders. Fundamentals, they're good, right? If you're looking for a long-term investments, but they only change essentially 4 times a year, right? You can't base your intraday decisions or your weekly decisions on the fundamentals. You're going to be looking at the chart and determining, okay, here's support, here's resistance, this is where I think it's going. Now, this comes down to NADEX, right? And as a CFTC registered exchange and clearinghouse, NADEX adheres to regulations including matching buyers and sellers and not participating in the trades. This is something that those scam brokers are doing. They are the ones taking the other side of your trade, which is why they want you to lose. NADEX holds all member funds in segregated accounts in top-tier U.S. banks, Fifth Third Bank and BMO Harris. And the only way that NADEX is getting their income is solely from exchange fees, not from taking positions in the market. This is the difference between an exchange and a broker. So if you have traded futures before, or you have traded, an options contract, or you have traded a stock before, most likely your broker, TD Ameritrade, E-Trade, Schwab, Interactive Brokers, whatever, they're CFTC registered. And that's what comes down to be the difference here when it comes to NADEX. Now, a few of my favorite benefits, again, limited risk. The maximum amount you can lose on every trade is your original investment. Let's say you go out and you sell a call on Tesla, for example, right? You can potentially lose, if Tesla goes to $2,000, you can lose a lot of money. You don't know what your max risk and max reward potentially is when you enter into that position. And not only that, it's not limited. This is limited risk. Again, remember, we're talking about low entry to get into the markets at $250. Now, the reason that low collateral is required is because binary contracts are priced between $0 and $100. So the least amount it'll ever be worth is $0. The maximum amount it'll ever be worth is $100. And again, you can trade multiple contracts once you've proven out. But again, you're looking at using less than $100 in capital here if you wanted to get into the markets with NADEX binary options. There are also short-term contracts. Binaries have expirations ranging from every 5 minutes to 1 week. And this is what I talked about, is how can one trade when they have a full-time job? Jules asked the question there. You can trade because they give you different expiration times across different products, ranging from Forex to commodities to indices, all across the board every 5 minutes, all the way up to 1 week. Now, my favorite part about binary options is when you enter into the contract what your profit or loss will be based on where the current price is. If you buy in for 50 bucks, that is your max risk. Now, if we're buying in for 50 bucks, again, these contracts go from 0 to 100, so we also know then what our max reward is. If we bought it for 50, it can go to 100. Our max reward is $100 there. What are the costs associated when it comes down to trading NADEX here? So NADEX commission and cost structure. When the trade expires, entry and exit before expiration, it's $1. That's it. You're going to pay $1 to get in. You're going to pay $1 to get out. If your trade expires in the money, that's meaning you held it all the way until expiration, and it is now, you said it was going to be above 3,000 for the S&Ps. The S&Ps are trading 3,020. It's going to be $1 settlement fee for you to collect that max $100 on that position. Now, trade expiration, if it's out of the money, you were wrong in the direction that you chose. There is no settlement fee on that particular contract. But again, if you're looking to get in and out of these positions before expiration, which you can do, just like a normal options call or put or a regular stock, you can get in and out at any time you want. You're going to pay just $1 to enter and exit that trade. All right. So why traders fail? Number one, they're trading the wrong product. That's as simple as that. You're looking at trading something that you either don't understand or it has too many different complexities there that you're focused and you just get analysis by paralysis on what it is you're doing in the markets. You have an unknown max risk upon entry, which creates that emotional hope. You get into a position, quick question, whoever has gotten into a position, you went long something and you go, okay, I'm only gonna lose $100 on this trade or whatever your number is, right? And you didn't set a stop loss, or maybe you did set a stop loss, and it starts coming down towards your stop loss and you move it just a little bit, right? Or maybe you even decided you wanted to add in a little bit there because, oh, now it's gonna go back up. It almost got to my stop loss. I think it's a good spot to maybe throw in another 100 shares, whatever the case is, right? If you're in bucket number 2, you've done this and you know that you've done this, and that's why you're not answering the question. It happens. I've done it. I can promise you that if you haven't already done it at some point, you will get there at some point. And that's what we want to avoid. We want to avoid that unknown max risk. We want to be able to just say, okay, I'm going to lose X amount of money on this trade if it doesn't work out, and be completely comfortable with that. Number 3 there is no defined trading setups. Again, rule number 1. I talked about it in the beginning. Now, Warren Buffett has a different rule number 1, which we'll get into Warren Buffett in just a second, but this is my rule number 1. I want to know the name, what it looks like, how it acts, what it's telling me, if it's screaming at me, if it's saying, hey, come over here, we're going to have a drink, whatever it is. If the market is telling me that, I need to know it, and the only way I know that is by defining my trade setups and then giving them a name. Number 4 is analysis by paralysis. When you first get into the markets, and I'm guilty of this too, I'll admit it. When you first get into the markets, you come across every shiny object there is. There's these Bollinger Bands things. There's this RSI with a MACD crossover, and then we got this moving average crossover thing that seems to work out pretty well. And then somebody else shows us this other thing. And before you know it, we got 50 different indicators on our chart, and you can't even see what the candlesticks look like or where price is actually at because you got too many other lines on your chart. That happens to a lot of traders, and then they slowly start to work back and start taking things off their charts, which is a good thing. That's where you want to get to. Number 5 is reacting to price rather than having a plan of where to trade in advance. Jeanette mentioned this when she introduced me there, where I have this thing called a morning write-up where I actually walk through each of the markets I'm looking to trade on the day, and I have a sheet. I have a 1-page sheet that tells me, boom, what is this? Boom, what is this? What is this? And I literally just walk through and I fill in the blanks and I go, okay, cool. Here's my plan. Apple. If it does this, I'm willing to do this. If it does that, I'm not going to do this. Whatever the case is, right? Reacting to price rather than having a plan is going to lead to the final one there, which is just addicted to chasing both up and down moves. If you don't have that plan and you're just sitting there typing in, scanning for symbols that are moving, you're going to end up caught in a chase situation, and then you bought at the top, you're selling at the bottom when you should be doing the exact opposite. Yeah, theta is definitely a big situation right now. All right, so like I said, my rule number one differs a little bit from Warren Buffett's rule number one. Here is a babyface Eric. This was actually circa 2011. This was in February of 2011. Before I went full-time here in the markets, I was actually fortunate enough to fly out. Again, I'm in the Washington, D.C. area. I was able to fly out to Omaha, Nebraska, and sit down and actually listen to Warren Buffett give a presentation, and then rode with him from his building in downtown Omaha to one of his favorite restaurants and had lunch with him. And you can see root beer floats there going on in this picture as well. But Warren Buffett, super smart guy. I like to listen to people that are definitely smarter than me, and see what it is that they're doing, what it is they're saying. So Warren Buffett says a couple things here that I think will help you guys. Number one is, should you find yourself in a chronically leaking boat, energy devoted to changing vessels is likely to be more productive than energy devoted to patching leaks. So if you're in a situation where you're trading a product you don't understand, or you're trading something that's just not working out, your trading strategy just continues to lead to stop outs and stop outs, and you've seen your account fall by 10%, 5%, whatever the number is, most likely your energy is better devoted to either switching products or switching strategies. The most important thing to do if you find yourself in a hole is to stop digging. Number one and number two kind of go hand in hand. They just talk about either being on water or being on land. If you're just sitting there digging a hole, and I'm guilty of this, I will admit I have done it in the past. I don't do it anymore. Where I'll revenge trade, or I'll try and, I'm down $1,000 on the day, and I'm like, you know what? I don't want to end up $1,000 down on the day. And before you know it, I'm down $2,000 on the day, right? So I've been there, I've done that. I've learned how to stop doing that, putting rules in place to limit myself from doing so, and chasing bad trades in that regard. So the most important thing to do is, if you find yourself in a hole, is to stop digging. And for those of you that are in bucket number two, that it's gone sideways to slightly down, it's a good reason that you are here. You're listening to the people that Jeanette brought on, like myself and the other presenters here, because we're trying to help you to stop digging. And then last but not least here, number three, you can't produce a baby in 1 month by getting 9 women pregnant. So this one speaks to me because there's something that I constantly preach, and I say it almost every day in my trade room, and on social media, and in the morning write-up when I'm looking at things, is quality over quantity, right? Again, it's a true statement there, but when it comes down to quality over quantity, it's like, I would rather take 1 good trade than I would 9 losers and then finally hit 1 good trade, right? I just want to focus on that 1 good trade. And I know what that trade looks like, again, because I've named my setups. I know what it is that they look like. I know how they act. Again, that's what rule number 1 is for me. Perfect. All right, so the 5 best setups to trade NADEX with. Number 1 is targeting. This is great for trending markets. Now, up until just 2 weeks ago, we were in a really, really nice uptrend, was working out really, really well. Now, for the past few weeks, we're in a really, really nice downtrend. It's working really, really well. Still, again, it's great for trending markets. Number 2, which is my favorite setup, which I'm going to talk through and show you guys some examples of that here in just a minute, and even some examples all the way back to 2013, where this trade setup has been one of my favorite setups for years now, and there's a reason why. Number 3 is level to level. This is how to identify support and resistance before they actually trade. Knowing what it is the market's going to do or potentially going to do before it even reaches those levels. And again, before the market even opens on the day. Number 4, containment. This is taking advantage of range-bound markets. We don't really have range-bound markets at the moment, but when we do have range-bound markets, those people that are buying calls and buying puts looking for the market to break out, they're going to be the ones that take 9 losers in a row before they finally catch one winner that gets them back to break even, right? With this strategy, we can take advantage, we can recognize those potential range-bound markets, and then let the market range-bound while we make money from that. And then number 5 is a breakaway strategy, and this is actually putting the news announcements in your favor. It's not predicting which direction price is going to go, but letting it break out in either direction at once. And because of the pricing structure with NADEX, we're able to take advantage of that. All right, so the MLT divergence indicator, or the MLT divergence trade setup here. This is what I want you guys to write down or take a picture of this screen right here, because we're going to be walking through these 4 steps to identifying this trade and how it is that we can actually use it. Now, this trade setup that I'm going to show you guys right now works on a 5-minute chart, and you can literally take exactly what I'm going to show you, pull it up on your own screen with nothing else, and start looking back and seeing just how well it's worked over the past few weeks. Now, what you want to do with this is identify the potential highs and lows of the day. Simple, easy, right? We can all do that. After that, first step is wait for the first 15 minutes of the trading day. We let the first 9:30 to 9:45 session of the day go by. We're not looking to do anything in that time frame, right? If you guys are tracking your trades and knowing what it is that's working and not working for you, most likely a lot of you are taking losses in that first 15 minutes. You get caught in that chase, right? You didn't have that plan identified, and you end up chasing in that first 15 minutes because there's a lot of volatility. The market just opened up. Number 2 is mark the highs and lows of the day of each indice. So we've got the S&Ps, we've got the NASDAQ, we've got the Russell, and the Dow. There's 4 main indices for the US markets. Third step, wait for one market to break the high or low of the day and the others to not. We can do that.
He's happy to do it. Doesn't like doing by himself. I was thinking that too, because
number 4 is wait for the trigger and choose the closest strike to that price. Again, NADEX gives us a ton of different options, a ton of different timed exits, a ton of different strikes that we can use. So if the market is moving, we have a number of options available there for us here with choosing our strike. All right, let's take a look at a chart. So this is what we've got right here with, again, the S&Ps, the NASDAQ, the Russell in the bottom left, and the Dow in the bottom right. You guys have seen this. You can use the SPY, QQQs, IWM, or the DIA here. Doesn't really make a difference there. They're going to chart the same thing. So again, like we talked about, we're looking to identify the potential highs and lows of the day. We're waiting for that first 15 minutes, and then we're looking for something to stand out to us where one of the markets did something that the others did not. And in this, I think I can actually use this pointer here. Perfect. You guys can see this little pointer. Cool. What we're looking at right here is, notice here at about just before 10 o'clock in the morning, the Russell comes down and takes out that morning low right there. This red bar comes down, boom, new lows for the Russell. Now at 10 o'clock or just before 10 o'clock on the day, the S&Ps putting in a higher low, the NASDAQ putting in a higher low, the Dow putting in a higher low. So again, we're identifying these potential highs and lows of the day. We're waiting for one market to break and the others to not. Now, when that happens, we go, okay, we see the Russell making new lows on the day. We see nothing else making new lows. We can with a good amount of certainty know that this is going to potentially be the low of the day for the Russell. Yeah, 10 Eastern. So like 30 minutes into the trading session here. 1, 2, 3, 4, 5, 6 bars exactly into the trading session there for the Russell. So we've got a long opportunity in the Russell here when we wait for the trigger. Now, again, the trigger, like I talked about here, is just going to be a simple bar break. So in this example, we've got the Russell breaking down to new lows. We just wait for this bar to get taken out. We can place our buy stop orders in there. We can choose our strike. We can get in. We can trade this with actual options. We could trade this with futures. We can trade this with NADEX. We could trade it with the ETF of the IWM if we so choose, right? We're waiting for a break of this bar. Our stops go below the low of this bar, and we rally this up to wherever our targets are from there. Now, on this very same chart, there is another divergence trade setup here. This not only works in bull markets, it also works in bear markets, and potentially to show the end of each of those. It actually, on a larger time frame, showed the October 4th, 2011 low from a major swing divergence. Now, what I'm talking about here on the short side is right up here. You can see the S&Ps at about 145 or so, just before 2 o'clock here. They pop up, they get new highs. We took out this prior high right back in here. Well, at 145, what's the Russell doing? It's not breaking any new highs. What's the NASDAQ doing? Popping up equal highs, maybe eked out a little new high there, but guess what? The Dow didn't. So we've got two markets breaking out the new highs. The other two, being the Russell and the Dow, are saying, no, we don't really want to go higher. What do we do from there? We roll over, we go down towards lows. Russell actually ends up making new lows on the day, right? So here's a long setup and a short setup all within the same day, risking one bar at the top, one bar at the bottom here, and looking for those potential highs and lows of the day to be set. This was just from back here, December, 3 months ago. Following up with that, just right after that, here's another trade setup. This one should be, I don't know, obvious. So I'll let you guys pick this out. Let's see how well I was able to explain the previous one. You guys let me know where you think the divergence is on this chart. Again, we've got the S&Ps in the top left, NASDAQ in the top right, Russell in the bottom left, and the Dow in the bottom right here. So on this particular setup, again, I've just got 4 charts there. Looking at the 4 indices, where do you guys see the potential divergence here on the day for this market? I'm gonna take a quick drink of water while you guys are throwing in an answer there for me. Nobody? QQQ. All right, Gunther, give me a little bit more information. I mean, you're right. Exactly. So the Qs here. The Qs at just, maybe 15 minutes after 11 o'clock here are coming down and setting a higher low. The Dow came down, put in new lows on the day. You can see we broke through this prior low back here. The Russell comes down, breaks new lows on the day. This is the low of the day for the Russell right there. Russell comes down, puts in new lows. Same thing in the S&Ps. S&Ps come down, they put in new lows on the day. NASDAQ here puts in a higher low. Again, this is such a simple strategy that you guys can take this and go back and test it on your own chart. Put your global cursor settings on and scroll through the chart on a 5-minute chart, and you'll be able to see these and identify these like Gunther did just there. Right, so NASDAQ, higher low there. Looking to take advantage of the market. You're looking for a break over the high of the bar, and boom, you're in the markets. And at this point, NASDAQ rallied about 40 points there. All right. Next up here, another trade setup here in the divergence. You guys can see this one as well, where we ended up coming down. We set new lows on the day for the Russell here on this spike bar here at about just before 3 o'clock in the afternoon. And the Dow did not, the NASDAQ did not, and the S&Ps did not. Now, there's also one more on this chart, but it's kind of hidden. It's right up here. It's just after that first 15 minutes in the Russell there. The Russell pops up, gets new highs on the day, 20 minutes into the trading session. The NASDAQ doesn't get new highs on the day. The Dow definitely does not get new highs on the day. And the S&Ps definitely do not get highs of the day. So in that moment in time, we're now looking for the market to potentially sell off. And we're looking for an opportunity to get short there. And what ends up happening? Russell breaks through the low of that bar and instantly drops about 8 points. Now, this was in a lower volatility time, obviously. 8 points in the Russell happens right now in 2 seconds. But it works in both volatile times and in normal market conditions. Super, super simple there. All right, when it comes down to choosing a strike here for the divergence trade, we're looking at the closest strike to at the money. So if the trigger, if you will, the break of the bar in the S&Ps is 3,000s, we're looking for the strike closest to 3,000. I don't know what he's looking at in this picture, but it's kind of funny. Number 2 is we're choosing the 4:15 p.m. expiration for this trade setup. We're giving ourselves the gift of time, allowing the markets to work themselves out from there. Number 3, this is a little caveat. Again, if you're able to look at the markets during work, right, or you're looking during your lunch break, right, you saw some of these trade setups happen around 11:30, 12 o'clock, 1:30. Depending on your time zone across the US, that could be, either early morning for you before work, or that could actually be during lunch hour. You can look at an hourly strike if there's 45 minutes left to expiration. So you can pick up that position, allow the market to go ahead and do its thing, knowing that your risk is defined, and within 45 minutes to an hour, your position either works or it stops out. That's it. You've eliminated all of that psychological other stuff you got to focus on or think about or worry about, and you've drilled it down to just one simple thing there. Number 4 is close the trade if new lows or essentially new highs are made if you're looking at longs or shorts there. So really, really simple. One bar, break above, break below, let it do its thing, or close it if it stops out. All right. No, because NADEX pricing is still the same, Scott. Really good question. With the high IV today, are these trades rather expensive? The answer is no, because NADEX is still priced from $0 to $100. So the at the money, which is the one you're looking at, is still priced right around 50 bucks. Now, I took the divergence setup there, and I was like, all right, how can I make this better? How can I go from identifying these and finding these on my own to actually putting something in place that would say, hey, over here, we got a setup right here. Well, I ended up taking, again, the 4 charts that you guys see, S&Ps, NASDAQ, Russell, and Dow, and taking the divergence from that and adding in these arrows that help me to identify now those potential highs and lows for the day. Prime example here, the Dow comes down, is putting in new lows here just after 10 o'clock on the day. We've got some signals in place. We can see that the NASDAQ is not putting in new lows. We can see that the S&Ps are not putting in new lows. So we've got the Russell and we've got the Dow putting in new lows on the day. We wait for our bar break and boom, market ends up rallying from there. And we set basically the low of the day until the last 5 minutes there in the Dow. Again, later here in the day, we see another setup at about 2:30. S&P pops up, gets new highs on the day. NASDAQ, no new highs. Dow pops up, no new highs. There's a little wick right there at the first 9:30 bar in the Dow. You can see we couldn't get through that. Obviously, the Russell here is in a solid 5-minute downtrend at this point. No new highs on the day. Now we know, okay, S&Ps have most likely topped out for the day. We wait for our bar break, and boom, we are in. Do I trade in pre and post market? I do. I'm actually going to show you guys something on that in just a second. All right. What about the other 4 strategies? This one is going to answer your question there, Paul. The other 4 strategies, again, I just showed you the divergence trade setup there. That was the only one I showed you guys today. We talked about the other ones. We gave them names. We know what they are, right? But I wanted to make those something that people could just set it and forget it. So hopefully you guys remember this image, or the whole, maybe it's a little different than bunny bread, but this guy talking about the set it and forget it here. I wanted to design some strategies that the other 4 that I talked about, where we could place these in the morning between 8 and 8:30 a.m. Eastern time and go, okay, let's set these, forget them, come back, let the markets do their things, and we've got our orders in place and working. So this works for those of you that asked about how you can trade when you have a full-time job working a 9 to 5. This works for if you want to trade in the pre and post market. This works in high volatility like the current situation we're in, and it works in normal market conditions like we're kind of used to over the past 9-year bull rally at this point. So with those 4 strategies that I talked about, I went out to my members and I said, hey, look, what are the things that you guys would like from strategies? What is it that would help you guys in identifying these trade setups, being able to take advantage of them? And I worked with, again, thousands of members here at MLT, and I took all of their feedback. I fielded hundreds and hundreds of emails, just like what you guys are saying right now. How can I trade in pre and post market? How can I trade if I have a 9 to 5 job? And I said, okay, let me start putting some of these strategies to test. I'll send them to you guys. You guys give me your feedback. We'll tweak these together and come up with what is working for you guys and what works for me as well. So this is August of 2019. Again, markets were a little bit more normal back then, again, but it doesn't matter, right? We know what it is we're looking for with these setups because we've identified them. So what I did is I took middle of August there, I started putting out some trades. And these were all sent out about 8:30 each morning. So in the first 30 minutes there, 8 to 8:30, I went ahead and did my analysis, which I'm going to show you guys how to do that. And I said, okay, boom. By 8:30, I sent this email out and I said, hey, these are the trades I'm looking to take. We placed our orders and we allowed the market to do its thing. So you can see the top one there, starting on the 12th of August, we looked at a US 500 contract. That's the S&P 500, most liquid market you can possibly trade. And the results speak for themselves here. This is the first month of sending these out after working with traders and seeing what it is that they would like, how it is it can work for them. So what we've got here is, in this case, we're looking at, we have an entry price here of 80.50s. We went ahead and placed that position. We look to place our working order to buy that back for 50 bucks. Results in a net profit of $30.50. And you can see it on down the list. Now we have some losers in there, right? You're obviously going to have losers, but trading just one contract, right? Again, no more than putting, $50 to $70 at risk on any given trade throughout the day results in a $235 profit at the end of just half a month, the first month that we started doing this, right? There's a couple trades in there that didn't fill. A couple pairs trades in there where you're looking to use one of the containment or the breakaway strategies, right? Just looking for the market to do its thing. And then there's another one in here where we add a second element where we're looking for second targets. And what we ended up doing there is now taking it over and going, okay, we want to have if this is something you guys aren't already doing, which you should be doing, is having a max risk per position, right? If you're getting into a trade, let's say you're buying 100 shares of Apple, right? Or you're buying 100 shares of Tesla. Those risk metrics are 2 totally different things. Apple is 240 bucks. Tesla is 440 bucks, right? That's $22,000 versus $44,000, right? So we wanted to be able to have a risk metric that stays consistent here. And that's where we put in a $50 to $60 max risk per trade. 50 to 60 bucks max risk per trade. If you're on this webinar right now and you can't risk 50 to 60 bucks per trade, then 1, you should go to demo, and number 2, build your capital until you're able to risk that 50 to 60 bucks per trade. And when we did that, we reran the numbers here, and just risking 50 to 60 bucks per trade ends up yielding $501.75 on the month. Now again, this was only half a month. NADEX has no stop loss set up and you have to close the trade manually. So how can we do that with set it and forget it? Because we place our orders to close the trade where we would like for the trade to close out. Z, we're not trading futures for 60 bucks. We're trading NADEX. NADEX is the product you're trading based on the underlying of the futures market. But yes, you would be taking out for 5 ticks in the S&Ps right now in a blink of an eye. That's why NADEX right now is extremely powerful to you, because you can still take advantage of this volatility in the S&P 500s with 50 to 60 bucks risk per trade. Now, take this over to September here. You can see September, we have about the same number of trades. We're working with the same thing. We've got our profits 1 over here. We've got our second targets that get hit on a few, and ends up being good for $96.25 using just 1 contract. Now, we went down a little bit from the previous month. That's fine. That's going to happen. You're going to have really good months. You're going to have months that are half of what a really good month is there. That's just part of trading. It all averages out. But then when we take it over here to a $50 to $60 max risk per trade, you can see where those numbers start to stack up, and it's good for $286.25 there on the month. So we take last month's numbers of $500, this month's numbers of $286, using just $50 to $60 max risk per trade. That's a really good return percentage-wise on your capital. And again, you can scale that. If you're a larger trader where you can risk $500 to $600 per trade, obviously you just multiply these numbers by 10. If you're even larger than that and you can risk 5,000 to 6,000 per trade, then obviously you multiply the number even more from there, right? Can you use this system with Forex trading? Yes. The strategies that I'm teaching you work for any product. At the end of the day, it doesn't matter what you're trading, right? You can trade stocks, you can trade options, you can trade futures, you can trade Forex, whatever it is. A chart is a chart. The number one homework tip I could give you guys during quarantine, actually, outside of journaling your trades and going back and reviewing the trades that you took and writing each one down and identifying it, is taking a chart, having a random watch list right on the side of your screen, close your eyes, click a chart, bring it over on your main thing and hide the symbol. So you have no emotional attachment to whatever the symbol is, and go through and identify the setups. Scroll back 3 years and identify, boom, here was the support and resistance, and scroll forward on the chart like it's real time, if you will, and identify those without having a ticker symbol there. Your Apple chart is going to look the same as your USD JPY chart, is going to look the same as your S&P 500 chart, is going to look the same as your gold chart. At the end of the day, a chart is a chart. It's showing price and time in a red or green candlestick. That's it. Doesn't make a difference. All right. Moving into 2020, right? So took the time, worked with members, developed the strategies, and then into 2020, I built a new course and then took some time away from the screens. Like I said, I wanted to, I like to travel. I wanted to build out this course. I wanted to show and teach the strategies I was using to members and then see how they did with those strategies. And the results were really, really good. This is Scott S. from Myrtle Beach, South Carolina. He is an active room member in the chat as well. He ended up taking advantage and signing up for the course. And he says, the first 3 to 4 trades that I did using some of the analysis that Eric goes over with it and some of the strategies, I've already more than paid for the course. If any of you out there are looking at doing this course, I highly recommend it. Again, we're talking about quality over quantity in just the first 3 to 4 trades. That means he took what I said and actually listened to it and applied it. He wasn't just out there willy-nilly chasing trades, trying to catch the high, trying to catch the low, whatever the case is. He actually took quality over quantity, which is extremely important. So I took that, I built this course. It's called the NADEX Trader, and it is my best setups to trade NADEX. I'm going to show you guys how to take advantage of the targeting trades. I'm going to show you guys more in depth on the divergence trade, some little ninja hacks, if you will, right? We only had a little bit of time here to cover the divergence trade. The divergence trade is a setup that I came up with personally, worked with the programmer to show you guys those signals there, identifying potential highs and lows of the day. I did that in 2013. I'm still using that setup to this day, right? I came up with a strategy in 2012. 2013, I had the indicator coded up. I've been using it for my own personal use and just recently released it to members of the chat here, like I said, with this course. So also, you're going to get level to level. That's how I'm identifying where the market can potentially go before it even starts making the move towards that direction, right? I'm knowing what the support and resistance is before it even trades. Number 5 is containment. This is, again, for those range-bound type of markets where most people end up getting chewed up, giving back their gains they made when the market was trending. And then number 5 is the breakaway. This is those people that like to trade the news announcements. They want the quicker moves, and they have a problem when it comes down to predicting which direction the news is going to end up moving, or they just want to take advantage of it in general, right? So I put all this stuff together here. We've got the NADEX Trader course, easily a $497 value. You heard what Scott said about it. I also put together a bundle of MLT proprietary indicators. These work on the Thinkorswim platform. These are a collection of indicators that I use day in and day out for myself to identify what's happening in the market. Again, I use my charts are clean. You guys saw them, but I have a couple things that kind of pop up and show me different things throughout the day. I have one that's specifically in there is a do not trade. Tells you what levels, when the market is inside that, don't trade it. Number 3 is a custom trade grid charts. Thinkorswim has this amazing feature where I can share you guys exactly what my grid looks like and what levels I'm looking at on my chart, all that. I send that to you guys, $299 value, easy. You also get access to my live chat room. So myself and my business partner, which I talked about, where we have over 500,000 people that follow us on social media, we're in there every single day. We give out trade ideas. We give out, we share our screen. We show you what it is we're doing. If you bought this course just for that alone, it pays for itself. I talked about TLT 2 days ago. I said get long TLT. It's going to make a move over 165. It's moved $15 in 2 days between Thursday and Friday being yesterday. Moved $15. Easy. You also get lifetime trade review access. So as I'm taking trades, I just put one out just recently this week here on YouTube for free, where again, like I mentioned earlier, I'm trading physical shares of stock because of the volatility of the VIX is at 60, 70, 80, right? I put that out for free on YouTube, but you guys get the behind the scenes with lifetime trade review access inside this course for the NADEX trades I'm taking. It's a $2,585 value right there. And when you add in the bonus for the MLT divergence indicator, the one I showed you, the simple red and green arrows that identify the potential highs and lows of the day, that is an extra $997 value, brings it up to $3,582 worth of total value easily. Now, I'm not going to charge you guys $3,582 today, but you can sign up today only. All of those things included, and the indicator, lifetime chat room access, trade reviews. You literally get to type in and say, hey, what do you think about this on any given day you want inside the chat room? And you can do all that for $297 today only. All you guys got to do to get signed up is go to www.mltnadex.com. And Jeanette's going to type that in the chat room there for you guys as well. You're also going to get my NADEX game plan cheat sheet. Like I said, I have a cheat sheet where I walk through and I say, boom, this is what I want to do each and every day. I walk through the questions. I also did the same thing here for NADEX. If there's a breakaway strategy on the day, you just follow the questions on the cheat sheet and it tells you, boom, here's the setup. If there's a containment setup, it shows you, boom. Yeah, so you guys also get that for free as well. So how you guys get started is by going to www.mltnadex.com to enroll in the NADEX Trader course today. Once you've done that, you guys are going to get a link to log in to the trading chat room. It is a 24/7 chat room. I was actually just talking with members in there earlier today before the presentation here. You guys are going to get the MLT indicator bundle and the divergence again as well. So go ahead and install those on your Thinkorswim platform. Really simple tutorial videos how to do that. And then start learning the 5 setups that I use to trade NADEX. We're going to walk through those step by step with the criteria of if this, then that, why we do this, why we do that, and just how you can lay it out and identify those trade setups really, really easily. Number 4 is to set up your NADEX demo account. If you have not traded NADEX yet, again, we're going to start on demo so you guys learn the platform. And then number 5 is start practicing, practicing, and practicing. And I will see you guys in the trade room. Any ongoing monthly or annual fees? For the course itself, Paul, no. And lifetime access to the chat room. I don't charge monthly fee for my chat room at all. I don't charge a dime for that. The only thing is after you sign up, you do have the option to receive those morning write-ups that Jeanette talked about when she introduced me. That is $1 for 14 days. And that's where you guys get that my notes, whatever I pour out from my brain onto a piece of paper each and every day, and things like the TLT trade, things like the Boeing trade, things like Tesla trade. This past week, for me personally, I missed 2 really good trades for me, but this past week was a little over $14,000 in profits for me, and every single one of those trades that I took was outlined in that morning write-up. So $1 for 14 days. And then just $79 a month after that. And those are the ones that Jeanette reads, like she said, each and every morning. What platform does the indicators work on? The indicators work on Thinkorswim. So Thinkorswim is a free platform from TD Ameritrade. Even if you don't want to trade through them, you can use them for charting. And I think they're personally the best charting platform out there. Any other questions? I think I'm running on like 2 minutes, maybe, Jeanette. Where am I at?
You have 2 minutes, 1-2 to 12:08.
Okay, perfect. So let me know any questions you guys might have. Paul is saying yes to toss. Yeah, toss is the best when it comes down to charting. Webinar recording, would have to ask Jeanette about that. Any other indicators? Yeah, so I have the, again, you guys are going to get the MLT divergence indicator with this. You're also going to get a do not trade zone indicator. You're also going to get the NADEX strike indicator, and then you also get the 4Grid, which has another indicator bundle on there as well. Any installment payments? No, just $297 one time. $297 one time. All right, let me know if you guys have any other questions from me.
All right, I'm updating some stuff on my side, Eric. One more time, go through your offer, and then I'm gonna take over.
Sounds good. Yeah, so how you guys get started and joining the MLT NADEX Trader course, learning the 5 setups that I show or that I talked through, learning more in depth on the divergence trade that I showed you guys, getting the MLT divergence indicator. That alone, like I said, picking this apart just if you want it for one thing is more than worth it. If you want it for the divergence indicator, it's worth it. If you want it to learn the other 5 setups, it's worth it for that alone. If you want it just for the chat room access, it's worth it for that alone as well. So there's like so much value in this. It's honestly unreal. But yeah, how you guys get started, mltnadex.com. It's going to get you everything we talked about here today. And yeah, like Scott said, the first 3 to 4 trades, he more than paid for the course itself. And he's still around. He's still in the chat room, an active member each and every day. And yeah. What is your monthly profit, or have you had months without profits? Yeah, so monthly profits, again, it varies depending on the market, you know, like that, like the September month I showed you guys for $206 here with NADEX. I made over $50,000 that month trading stocks and options, right? So it really varies. This past week, again, was a little over 14,000. I think it was 14,400 and some change. I haven't done my journal for this week, but yeah. So you're gonna have some losing days, you're gonna have some losing weeks, and you may have some break-even months. That's just part of trading. But then you'll have those, you know, $50,000, $60,000, $70,000 days, months, weeks that more than make up for it. How did I do over the last 2 months? Really, really well. Yeah, no complaints at all. Awesome. Sounds good. Well, thank you guys so much for coming on, hanging out with me.